Well, my next guest says that, with all due respect to captain at Chelsea is Sully Sullenberger, soft landing a U.S. economy is a lot trickier than what he pulled off. Joining me now, editor of Grant's Interest Rate Observer, Jim Grant. Jim, you know that the U.S. economy, of course, is not an Airbus 320, and it's tougher to land in under any circumstance. But even now, you talk about these bigger themes. I want to talk to you about this in a second, but first, your initial reaction to yesterday. How surprised were you that they went 50?
Very. I thought it was a big non sequitur. Stock market at new highs, labor market's good. He said economy is terrific.
Although first thing he says, economy is strong, right. And as the conversation went on, it became solid. I think if they'd lasted another half hour, say it's okay.
In any case, not in recession, says he.
Right.
We get a recession like rate cuts. So I call that a non sequitur, Charles.
Non sequitur. So. Soft landing, misnomer. We probably shouldn't be using that term.
It's the wrong way of looking at it. I mean, this isn't the Hudson River any more than Jay Powell is Captain Sully.
Right.
I've seen the Wall Street Journal that he wants to stick the soft landing. So what?
Like a gymnast.
Or like the Soviets. How well they did sticking the Russian economy all those decades. In fairness to what they're attempting to do, it can't be done. Mm-hmm. There ought to be one mandate, in my opinion. Nobody asked except you, Charles. Thank you.
Right.
But let us have a dollar that is inflexibly okay, rather than this pretense of they're giving us a full labor market and happiness.
Yeah, I think what it feels to me is that even though they have this so-called dual mandate, they focus on one at a time. So it feels like mission accomplished on inflation. Now let's focus on jobs.
Yeah. Well, it's, who says mission accomplished?
Right.
They said, I think I heard the chairman say he was confident.
Right.
The Fed has a deficit in self-awareness. They were as confident in 2021 when the so-called dot plot was projecting 0% rates out for like 3 years.
Right.
So, the future is given to none of us to see. We can guess. But this R star, is that the pretext? R star is the Tinkerbell of interest rates. It's a conception. It is an economist's conception.
Right.
I hear Donald Trump say, yeah, I want to say in how they run the Fed, and I'm thinking that's a bad idea. Except there was a guy in Hong Kong, the financial secretary in Hong Kong, Sir John James Copperthwaite, held forth during the 10 years of the great Hong Kong prosperity. He said he didn't trust anyone to make a decision, a financial decision, unless that person had money up, unless that person had money at risk. And what Trump could say is that, I've been successful in life, but however, I have at times lost enough money to make the average married man go out and shoot himself. And I know risk.
Right.
And who do you want? So they're economists on the one hand,
right.
Tenured professors formerly.
I do, to your point. I feel like a lot of these folks are looking at ivory towers. I always wonder, do they even go to a supermarket? 113 economists, they just always seem to be disconnected with everything. But I don't want to run out of time without asking you about your latest letter, September 13th, that was titled Warren Buffett's Money Fund, because you equate the great U.S. bull market to the Russian nesting dolls. The U.S. dollar, I think, is the big one. Inside of that is the Federal Reserve, and inside of that is NVIDIA. So it sounds like you're not a fan of the stock market rally right now.
It is a very difficult thing to deplore, given how many people are happy because of it. But we shouldn't forget that it is at all time, almost everything. Price earnings, price book, price sale, what have you. Nor should we forget that the greatest equity investor is about ready to show a balance sheet that's 50-50 with more T-bills than stocks. That's
$300 billion war chest for Warren Buffett, just about.
Yeah. So when the greatest equity investor owns more bills than equities, one at least is advised to step back and say, if this is perfection, how does it improve? Mm-hmm. And
what do you do then? I guess you ride the wave, but you keep an eye on the exits.
Well, yeah, if you're really, really good.
Right.
But I can't, again, help but notice that some of the most successful investors in the world were happy at times to feel like a fool and not to play. You don't have to play.
Right.
Again, a Buffett quote, swing, you bum. Nope.
By the way, on that note, when Warren Buffett was missing the tech bubble in 1998, 99, 2000, everyone said he lost his touch. by 2002, they were saying he was the greatest investor once again. Jim,
Okay.
thank you so much.
Okay, Charles, I see you.
Appreciate it.